Hannah Wallace and welcome to FinextraTV. Kindly calling into our virtual studio now is Alexey Osipov and Adil Ahmed from Compass Plus. Hello gentlemen, thank you very much for joining us today.
Thank you.
Thank you for having us.
Really good to have you on. Now there's a lot I want to cover with you today. We're discussing payments tech, rising vendor independence, e-commerce and what's going on in the Middle East and Africa in the banking and payments sector. So a lot to cover. Alexey, coming to you first then. A lot of financial institutions in the Middle East and Africa are seeking to become less dependent on their technology vendors. So can you tell us a bit more about that and what's driving this trend? Let's start there.
Yeah, that's true. So in my humble opinion, indeed, last 10 years, the change was quite dramatical. And different factors actually drive these changes. So first of all, definitely we should say that the new technology and technological process was introduced on the market. Well, everybody can see like project methodology is changing, like deployment of agile approach, which speed up the deployment process of different projects. Also, the technologies itself, like we can see vast let's say hype around different technologies like blockchain and all the others. New, let's say, technological services are also introduced and driven by international payment schemes like tokenization. So all of these push the market to change dramatically. And also these rising speed of the changes also shrink the life cycle of the banking products, not only banking products, but the products itself in general. So it means that to be successful, every single player should focus to deploy their own project as fast as possible, because after a while, any successful project will be copied by the competitors. And it means that the time to get a cream from the market, to get a margin, is really shrinking as well. So all of these makes players to have their own tools, to be more independent, to be more fast, let's say, with these new projects, with these new services deployment. So this is why the rising demand we can see on different flexible tools, own tools, which gives to the market players an option to be less dependent on any third parties and to have, you know, the hammer in their own tool, in their own hands, to again kick off and settle any service, any product as soon as possible.
All right, thanks Alexey for bringing us up to date and setting the scene for us there. And now Adil, coming to you, would you say that financial institutions in the region are being served or indeed underserved by vendors at the moment? What about that?
Well, definitely I would say underserved because many financial institutions in Middle East regions are operating the EFT platform that were built in 90s, and their architects does not support the object-oriented languages or the latest technologies, which will enable banks to manage their product and services and modification themselves. I believe this is one of the single biggest challenges for the regional financial institution to meet ever-changing market dynamics and the modern-day payment landscape in the timeline set by their business team. Many legacy systems, due to the lack of their system flexibility, dictates the banks how they will operate their EFT products and services, where modern third generation technology-based solutions like Transactions, we ask the bank to tell us what are their business processes and the requirements, and we will configure our solution according to their business objectives. And therefore, nowadays, what we see, most of the banks, especially in Africa, are very much focused to explore the technology vendors who can help to future-proof their business and replace their legacy systems.
All right, so let's talk about legacy systems a little bit more. Alexey, what risks do financial institutions face when maybe continuing using those legacy platforms?
Well, yeah. First of all, I think we should put a glance on from the top on this problem. And we should say that all the vendors try to unify their products, the products they sell to their end customers, etc. It means that if any customer of the vendor wants to deploy something innovative, something which absolutely different from the basic set of the products, it can cost a fortune, it can be endless, etc. So the risks are exactly these. So risks number one is definitely financial risk. You risking to stay behind the market and to lose money if you wouldn't be fast as required with the new products introduction on the market, which is really on the demand on the changing market especially. This is number one. And number two definitely is cost savings. So if you depend on your vendor, you will follow these endless procedures with related to technical design, confirmation, etc., new customization requirements. But if you have your own tools, you flexible with the balance of operation costs, and you have a choice to do something with yourself here if your technical team is quite experienced, or to order to your vendor. This means that you can optimize two factors. Factor number one is the speed, which allows you to introduce your new products as soon as possible. And item number two, definitely the costs, because you can balance what you can develop by yourself, or you can order something to your vendor.
All right, that's interesting, and some good advice weaved in there as well. So thank you for that. And I want to end on the trends. What sort of big banking and payment trends can we expect to see from the region as we move further into 2022? What about that?
Well, yeah, if we were talking about the payment products and services, definitely the trend will be actually quite the same like we saw last 2 years. This is a switch to a e-commerce project. This is a switch to different cardless payment technologies. We can use it's not mandatory right now to have a card because the card is just a token to have an access to your bank account and finally to all the payment services your bank can offer. So another trend, in my humble opinion, is biometry, but there are some issues with the biometry. Number one is that the legislation base. So it's depends on the jurisdiction, it depends on the very specific countries, but in some countries there are issues to use biometric authentication, for example. Another risk with the biometry is definitely the security reasons. So many people, many end customers just afraid to be that their data can be compromised and it can be used in different fraud transactions. So from the technology perspective, definitely I think the focus will be on the platform which are based on the actual technology stack. It means that this platform should be very flexible. They should be open for self-customization. But also we should pay attention that self-customization also is a very tricky thing, because it should still give opportunity to the vendor to support and maintain the core objects and the core of the system. So the flexibility should be related to the product level, to product customization level, but the objects still should be maintained by the vendor. And actually the best platforms which in my humble opinion have a very good perspective are from the vendors who will be able to maintain this kind of balance, who will be able to offer on the market the reliable platform which will be very well supported from the vendor side from one perspective, but from another perspective will give the opportunity to the end customer a flexible tool to modify the business logic and again to deploy the new project and services as soon as possible.
A fair few predictions there. And Adil, is there anything you'd like to add?
Yeah, basically, I believe that globally consumer preference are shifting towards digital, and they expect business banking services 24/7. The coronavirus pandemic has only fast-tracked the shift towards the digital banking domination within the banking industry. with restrictions on social distancing measures further reduces the historical branches services. So as Alexey mentioned, e-commerce, online and mobile banking services skyrocket since the arrival of the viruses, and since anyway that the things were moving. The other reasons for digital banking has picked up the interest because the government and regulators in Africa has intention to create a cashless society. Cash remains the most used payment instrument in this part of the world. Financial institutions in developing regions such as Africa and Middle East are interested in digital banking because it's a mean to generate competitive advantage, as Alexey mentioned, a channel for new customer acquisition, definitely emphasize the potential of the cost saving, and of course, enhance the security and prevent internal and external fraud. There has been a growth in digital payment in Africa for quite a lot time, and out of which mobile wallets and virtual cards in form of prepaid cards remain the fastest growing mechanism for electronic payments.
All right, so a fair few trends to keep an eye on in that region. Watch this space, but we'll leave it there for now. Look forward to catching up further down the line and reflecting on those predictions. But thank you very much for calling in today. It's been a pleasure.
Thank you.
Thank you. Thank you very much.